Well, it is happening. There is blood in the streets for crypto. 3 losing days in a row for TradFi. It is getting ugly out there, but no need to fear. We are here to talk with you through all of that, kind of, keep some calm out there. Look at what our game plan is going to be moving forward. All of that and more today on Money Never Sleeps. What a day it has been so far. Looking forward to discussing all of this as we get going. Quick reminder, hit that like button, subscribe to our channel if you have not yet. Nothing that Kevin or I say is financial advice. We're not financial advisors. So please do your own research before making any buys or sells. Get involved in the conversation, hop in live, drop comments if you're watching the replay, all of that good stuff. Kevin, we are seeing a lot of panic out there. From what I'm looking at, there's all this concern around the bond yields, both here in the US and internationally. People are finally wrapping their head around the fact that interest rates may have to be higher and stay there for longer. That's been something that you and I have been saying is a near certainty for, I don't know, weeks, months. I don't understand why it took, like, you and I are, I would say you particularly are quite intelligent. I'm on the moderate end, but how are all these people who have these high paying, big title jobs, they just think that, like, oh no, it's gonna come down sooner. Like, do they have this like ego of like, no, I know better than everyone else, and I'm smarter than the Fed, so I'm gonna predict what they're gonna do. And now everyone's like, oh shit, maybe I read this whole thing wrong. Is that what we're seeing right now?
100%. That's why they're wearing monkey suits every day, going to work, acting like big shots, making, a sizable amount of money, probably more than I am. But at the same time, I get to stay home, listen to metal, and trade naked. Like, I think we have it on the better side here. But yeah, people will just like, it's like that quote in The Big Short: people don't like to account for bad things ever happening, so they just don't. Well, that's probably what we're seeing a bit of here. And honestly, I think that there is some people that are panicking. I think that's more of the smarter people, like banks and shit like that. They're probably making some moves right now. But I think there's a lot of people who are coping, thinking that this is just a bit of a dip. I've seen, all of our people, our favorite people on Twitter and YouTube just saying, you buy the fucking dip. That sounds like financial advice. I can't give you that financial advice, but it doesn't sound like good advice if just being a rational human being right now, because I can't stand looking at the stock market right now. The Dow, the NASDAQ, the S&P absolutely cannot get a bid. It's absolutely just down only. It's insane to see how much it's been read this week. And, we were waiting for it. When the levy breaks, we said it was going to be bad and, it could be biblical. And I don't know, maybe worst part is this is just the beginning. It hasn't even really done that much yet.
When the levee breaks, great Led Zeppelin song. Also, amazing I think song. Trade Naked should be on a Money Never Sleeps t-shirt at some point. Maybe we take like the picture of Burt Reynolds on the bearskin rug and we just like superimpose your face on it. And then that's just like one of our pieces of apparel that we make someday.
I'm going to put a black bar over my eyes just because, yeah, man, that seems a little bit safer. I don't want to be scaring the kids off with Burt Reynolds' body.
That's the play. Yeah, it's wild to see. Like, it's getting up there. TradFi, the percentages that we see down, like for crypto people, is like, it's no big deal. But for TradFi, it's something, man. Like we're 3 days in a row of getting beat up pretty damn good. If you look at the NASDAQ, I mentioned at the end of last week, like, shorting the QQQ seemed like a good idea. In the last 3 days, NASDAQ down about 3%. So we're averaging about a percent a day. S&P right around the same thing. Crypto getting beat up. There's still so many people that I think are finally coming around to the idea that, like, oh, wait, like I said, these interest rates are going to stay up for an extended period of time. Like, Ace, welcome to the party. Mr. House, welcome to the party. Randy, first guy in the room, welcome to the party. It's a good time, boys. I'm not deploying capital into crypto quite yet. I still think there's some room to the downside. I was telling Kevin before the show started, I did just buy some more natural gas. I'm in on that trade with Kev. I think it is this is not a long-term one for me. I'll give it like, I don't know, 3 to 6 months probably is my time frame on this trade. And I'm not looking for it to be too greedy here, but I think it's going to give me a better return than just sitting in cash and a better return than sitting in equities at the moment. So that's the only real activity I have right now. I've just been waiting, and this is what I've been waiting for. We still have plenty of room to go on the downside. We can look here at crypto in a second. We can look at ETH. We can look at BTC. We can look at some alts if we want to, but we see the total market cap for crypto is below 1.1 trillion now. The total three, I don't know if this number is accurate. You'd put out a tweet earlier that there was another mistake in there. Is it off again? Is it about how much, like 1.8 billion or 2 billion off?
Like close to 3 billion. The problem has been just what do you call it? That they keep adding altcoin pairs to TradingView. So then they account for that market cap, and it's kind of thrown it off because it's not supposed to be that. It's supposed to be like the top 124 coins or something like that. But yeah, just throwing off the account itself. And so you have to just be careful. Like someone on Twitter, I think it was Ben Cohen, made another tweet to TradingView where I saw it was like 2.97 billion added within like the 1 minute time frame. Never happens. It's just they added an alt pairing. So be careful with that. But for the most part, we can see that we're down, a considerable amount from where we've been in the past few weeks. I remember we were at $354 billion. Right now, estimated about 330 billion. I've been saying that 300 billion is probably our target. We want to see us get there. But yeah, I think the 1.1 trillion is a pretty big move. And it also is just pretty much making our narrative of that head and shoulders on the greater, the larger time frame seem like it's more of likely of a possibility, right? We have to see the break still. The break hasn't happened yet, but seems like a nice head and shoulders to me. We'll look into the charts in a little bit though. But yeah, everything absolutely red. Gotta love it. It's early Christmas for me.
Yeah, I want to stay on the macro for a little bit, and then we'll get into the charts because they obviously at this point they play so heavily into each other. Like there's just so much interaction there. So there's this fear starting to mount now around the fact that, okay, maybe people, even though discretionary spending looked okay, maybe people are starting to run out of money. Maybe this is a situation where, you had the people who are like, oh, well, credit cards are at their all-time high, but that's also with wages going up. So that should be fine. Well, guess what? The credit card interest rates, the credit card balances are going to compound a lot higher than those wage growth numbers are going to compound. Okay. So there is some concern to be had there. We see more and more fear around the housing market and the fact that like we may have hit the bottom of the housing market just due to the fact that like we're going to see some supply start to come back up. We're going to see, with new builds, we're going to see as the rates eventually come down, whoever knows when that's going to be, more people wanting to sell, but more people wanting to buy. So it's kind of a really gross time out there when it comes to the housing market, which is a lot of people's largest holding in their portfolio. That's their most valuable asset is their house. At this point in time, that's a scary place to be right now, which is why you and I have continued to beat the drum of like having your most valuable being able to acquire assets and managing your money in a way to where you can slowly but surely, whether you're DCAing, whether you're doing bulk buys, whatever it may be, but the ability to accumulate assets beyond just the value of your home, which is also a liability, is incredibly important right now. Like this is the time, if you haven't, and I keep going over this over and over again, if you have not battened down the hatches, and if you have not gotten your spending in line, what the hell are you doing? Okay. Like I see so many people, whether it's, and I'm not going to try to sound like old man yelling at clouds here. People are, oh yeah, I eat out every meal. I don't cook at home. I do like simple. Like this is the most basic of shit that it may seem minuscule in one instance in a vacuum, but if you extrapolate that out and if you look at how much money you could be putting into whether it's crypto, like every week, if you can save $100 and that's just your DA for crypto, guess what? Financially, a year, 2, 3, 4 from now, you're gonna be in a much better place. So like getting your house in order at this point in time is so fucking important because that is going to allow you to continue to acquire. Like, is ETH a great buy right now? Not necessarily, but it's better than it was at 2,500 or at 3K. Sure. And in 6 years, is it going to be a higher price than at this point? I think so. So any money that you could be saving and putting into assets that are going to appreciate over time, where you can just kind of set it and forget it, is a smart thing to be doing. So like listening to our show, I appreciate everybody who does it. But if you're spending time trying to learn about technical analysis and macro and all these other things, but you don't have your spending under control, that like the rest of it doesn't really matter if you don't have the money to put into the markets.
Yeah.
Straight up.
Yeah, 100%. And again, living below your means for the time being isn't necessarily a big ask. I think 6 months, just even that is going to make such a huge difference for a lot of people. And I think, for this show, a lot of people, because I know we do have some younger viewers too, like young guys in their 20s and stuff like that. It's like, that's probably the best time where you can afford to live beneath your means. You just cut liabilities in general, and you have literally all your life ahead of you to pretty much invest in this market. But if you have a little bit of cash for the right time, you're going to be so much better off going in. You're going to be so much further ahead than a lot of other people your age going into this next bull market, because so many people are going to get hurt. And I think we're seeing this market pretty much, not prove us right just yet. But again, we don't want to get ahead of ourselves, but pretty much telling us that, hey, there's going to be a pretty good sell-off here. A lot of people aren't anticipating it. And this doesn't just affect people who are invested in the stock market. It's going to impact people all across, the entire world. Obviously that sounds dramatic, but it's true. It's going to play into everything from not being able to borrow money to, your credit card rates are still going to remain high. Inflation and oil, price of goods and oil will still probably remain elevated for a period of time, even if there's a market crash, even if they do, cut rates. It's just the way it is, right? It's supply and demand. So it's going to be a hard time, but, making those small little sacrifices today are going to better you off for the years ahead.
And the one other thing I'll say, and, I've been in this game for 15 years now. Don't leave just because it's rough.
Exactly.
Like, do not leave. Like this, so many people will never be able to get the right opportunity to buy, because when things get tough, they dip out and then they wait for things to recover. And once they've started to recover, they've already missed the best opportunity. Like I started in a bear market. Like 2008 was when I started investing. I got my ass kicked, but you know what? I stuck through it. I learned a lot from it, and I came out the other side. And some of the best buys I've ever made were as a result of like buying near the bottom there. So like, don't dip out. It's just part of the process. Like everyone has to go through this if they want to get to a better place. Like take your licks, keep coming back, keep showing up. Don't stress about it, but don't disappear either. Like this is not the time to vanish and wait for the bottom to hit and wait for the recovery to happen. Like stick around. Like I said, start DCAing at some point if you want to, and just gut it out. Okay. That's all. The best thing you can do right now is gut it out, because when the next bull market comes, you'll be in a better place. And then when the following bear market comes, you'll have already been there. You'll have that experience. You'll know how to handle it, but you will never be able to make the most of your time in the markets if you don't stick it out through the shitty ones.
Exactly. Couldn't have said it better myself. Yeah.
Okay. Let's get into some of the charting, because that's the really interesting thing right now. We saw a lot, like a big old red candle on crypto. Let's do TradFi first, okay? Because we're seeing it get even worse. It is dipping. It's like dumping hard going into the last hour of the day, and we're seeing the VIX pump.
The fuck, dude? I didn't even. Oh shit! It was 200 last time. We were just looking at this.
Yeah, the Dow has dropped another 100 points in the last 20 minutes. We're seeing the VIX take up. The VIX just crossed 18. It is moving. It's going to be closing its highest number since May. We're starting to see some things unravel here. Everything that I'm seeing pretty much is in the red, except for Google is about it. Oil's doing okay. Gold has taken a hit down under 1900. Continuing to see a losing streak there. The interest rate on bonds, it's green. Might call in YPF, that energy stock. Anywho, nice. But it's getting bloody out there, Kev. Let's look at TradFi.
Yeah, absolutely. I got the Dow pulled up right here. Insane move. I didn't expect it to be down 313 points right now at the end. But I guess anything's possible right now, especially since we're still in a bull market, right, guys? I don't think so. But if we're looking at this right here, we went through the 50 moving average on the daily. We just tore right through it. I think we're probably going to close below it. How much time do we have left in the day? 43 minutes. If we're able to close below this 50 moving average, it's likely that we're going to have to test this 200 EMA at some point. Again, I would anticipate that there would be a bounce at some point, but here's the thing with where we are right now. I think it's very similar to where we've been for the past, since October, all the way to where we were maybe at the top of this move. What's that, July? where we are seeing,
Real quick, shout out to Payne. Thank you for joining us as well.
Yeah, absolutely. Thanks for being here, man. Yeah, it's a weird place where we are, because if we look at this chart on the macro here, this is a daily chart. This has pretty much been like increasing nonstop and very few pullbacks, right? And now we're seeing what I think is the beginning of the same trend, but in reverse on the downside, where we're going to see a lot more impulsive moves down, and we're going to see very, short-lived relief rallies, corrective patterns that are just going to be met with more selling, because people are going to try and get out of their positions at probably the best level that they can given what's happened, right? This has moved down a considerable amount once we got rejected from this trend line up here. So let's grab this and say from the top of the trend line to where we currently are, we're down about 3.37%, right? I think people are going to try and take profit, or at least get out of their positions sooner than later. That would be my anticipation. But if you're looking at the Dow, this 34,347, this was a lot of resistance. We saw that we were hitting our head on this a lot recently. If we get below this, I think this becomes resistance once again, and we're not going to find enough strength to push up above it. So that's going to be a huge level. We're going to keep an eye on that. And I know the weekly is probably coming down. Yeah, it's on the way down. That's no surprise. This is a absolute, bearish engulfing candle, clearly, right? It's eating up, they gobble that shit right up, and it's on the way to the downside. It's almost something similar that we're going to look at Bitcoin in a second, this candle, but absolutely going down. I think it's going to test this 34,347. If it's not able to hold that, then, sustained hold of that, meaning when we close below it and we try and retest it at some point, I mean, it's probably going to break from this parallel channel as well. And if we're in a parallel channel and then this level of resistance is there, we're probably going to come down to the 200 EMA on the weekly, because that 50 is probably going to be somewhere around that parallel channel break. And that means that's probably not going to hold either. So with the Dow, this is actually pretty interesting. Again, we want to see how this plays out over the next few weeks, but this is a really good start. I don't necessarily think that we're just beginning, this descent down, and we need to keep an eye on that. If we look at the NASDAQ too, the NASDAQ's down 159, 160 right now. This is absolutely insane. Once it hit that level up there, got rejected. It's probably on the weekly going to come down to this 50 EMA. I would anticipate that it's going to test a lot of these levels of support that we once had. I mean, we're below the 50 EMA on the daily. It looks like there is room to the upside. However, we've seen how many days that have been red. And even if we do see green days, they're met with, equal, if not more, selling the day after. So we have to be careful with that. We see that there is a bit of control right now with the bears, and I don't think the bulls necessarily have the funds, or, institutional players necessarily are, trying to take advantage of this dip, unless they're trying to buy the dip at a lower level. Right now, it just seems like the bears have complete control. I mean, S&P, same thing, right? Right through the 50 moving average on the daily, probably going to test at 200 on the daily. That brings us to roughly 42.11. I mean, there's levels of support. I mean, this would be a level of support too, right here, 43.30. But if we're not able to hold that, 200 EMA on the daily is probably going to be our next level of support. And again, we're just going to see how this plays out, but we can see that even the small little green rallies that we've had in these past few days, they're very short-lived, right? As soon as it goes up, it comes right back down. As soon as it comes up, right back down. And I think that's going to be a key theme that we're going to start seeing in the markets. And here's the thing, this could last for a long time, right? I don't know if people necessarily remember this, but back in 2008, we pretty much were down only from, late August or September-ish all the way till March of that year when we finally bottomed. So this could get really ugly to the point where people are just like seeing red pretty much. It feels like we're seeing red every single day, and that every time someone tries to buy, it just nonstop thrown down. It's just rejected like crazy. So that's what I'm seeing with the major indices. It's insane that it's been moving down this fast this week, and it seems like no one's able to get a bid for it to push the price up. But yeah, it's absolutely insane. We can see that the VIX has been on a tear up here. It's looking to test that 200 EMA. Is it going to go above it? Depends. It depends on how the volatility does play out. I think that we are amping up for a pretty good move to the upside, especially if we look at that monthly, right? Monthly's been oversold for such a long period of time. We're going to test this 200 EMA, probably test this 50 moving average. And again, that's not too far. At 21, we've been higher than that for less in the past. And I think that we are pretty much just gearing up for a somewhat sizable move up, especially if these markets absolutely continue to remain red and we start to get more mounting news that seems very negative for the markets.
Yeah, if we look at the NASDAQ, keep it on the monthly, because we see that the NASDAQ is bleeding today, but it is still so overbought. And
exactly.
If we try to take this from a macro standpoint, it's like the daily can can maybe make some little bumps back up here and there, but that is a huge, huge level for the NASDAQ to be overbought. And there's a reckoning coming there, and we're seeing the early stages of that.
Yeah, and the NASDAQ, without the 7 stocks of the apocalypse, kind of a lackluster year, right? It's like it's barely up, if anything. With these major stocks, it's like, guys, those are the ones that are pretty much holding up the market. And I think a lot of people are kind of forgetting that Nvidia has such a huge market cap that could absolutely take down this NASDAQ chart. Insane.
I was just going to bring up real quick. Nvidia is the last of those companies to report Q2 earnings. It's next Wednesday. All the hopes and dreams of the NASDAQ are on blow off earnings from Nvidia next week. Even if the earnings come in, like, because they put out the expectation that it's going to be good earnings, but that's already priced in now. We have seen, look at every single other one of these big stocks right now. Look at Apple. They reported earnings decent but lackluster. We look at Tesla. They reported earnings good, but now they're getting their teeth kicked in. Netflix. Every single one of these major tech stocks that has reported earnings has taken an absolute ass kicking in the days and weeks after. And I got a big Nvidia bag. It is the largest portion of my portfolio. That being said, I am fully expecting us to see Nvidia get its teeth kicked in next week. People have raised their price targets to $500. Guess what?
Oh my goodness.
Fucking everything is priced in at the moment. Everything is priced in. Best case scenario is priced into every single one of these tech stocks. They're the last one to report. And if that report isn't fucking pristine, then we are going to see Nvidia take a hit, and it's going to pull everything down with it. That was part of my thesis for when I made that QQQ short call last Friday. I'm not changing it. Like, look at Tesla, man. Like, we can check out Netflix here, and then let's go look at Tesla, because it's under 220 now. It is getting fucking wrecked. Like, that was at almost 300 just a few weeks ago.
Yeah. I mean, it's absolutely insane. I just want to pull up Netflix because we made this call a while back. I was talking about how we saw these gaps on the daily. And you can see right here that there's a gap between, where this pushed up to the next level. And then obviously we came down a wick to this level, but it still created a little price gap. And we wanted to see that get filled because that was going to tell us the direction of Netflix. And we were looking at this on the macro. We see that this is a big ABC corrective pattern, one wave down, one wave up, and then we have the wave down to come. I believe that we are in the wave down, and filling this gap that we did last night in the post market pretty much gave me confidence that we are likely to be continuing down. My next target obviously is down here around $384, $386, but we can see that it just came right through this. And, Netflix has been on an absolute tear. It's down $13 today, down 3.12%. These stocks that were, extremely overvalued. I don't care what anyone says. These were extremely frothy, are now putting in, these patterns, and they're filling these gaps that they missed on the way up. And, this seems like, I don't know. It just seems like we're in impulsive structures, and any little relief rally that we get is going to be met with, instant rejection. And I don't think this move right now for Tesla is done just quite yet, even though it went through that level around 410 to 412. I think it's going to go for this 384, 386 pretty soon. And we're probably going to test this 200 EMA on the daily, which is down here around $366. It just seems like this is wave one, wave two. Now we're waiting for the wave three. And then, we still have 2 more waves after that, which could, potentially put us in another scenario for a short correction before we get another 5 waves down. I think that we're just in kind of like a sell spiral right now, and we're at the beginning of it. So it's going to get more dangerous the further down we go. Let's pull up Tesla too, because like you said, I didn't know Tesla dropped that much recently.
26% in the last month.
And look at where it went right to.
26% since they reported.
And look where it went right to. On the daily, went right to the 200 EMA. It's below it right now. If we look at this on the weekly, we could see that we went right to the 50 moving average on the weekly, right? So it looks like we finished that wave one. This is our wave one target that we kind of had projected. I mean, I didn't move any of these lines before we started the show right now, but we can see that it went right to it. If we don't hold this weekly 50, we're probably going to go down to the weekly 200, which scares me even more because there is still room on the downside for the weekly, right? It's not completely oversold yet. I think it might get into that oversold territory next week. However, it's very possible that, we don't go into the oversold completely. And then next thing you know, we're at this 191, and we got to kind of like change our targets a little bit, right? Maybe the 50 moving average on the weekly becomes resistance, and then we have another move to the downside. And this could, I mean, honestly, the way it's moving this fast tells me that there is a strong move to the downside for Tesla. I think a lot of people are selling. You look at the monthly. I mean, the monthly's probably not even. Yeah, I mean, the monthly looks like it still has room to the upside too. That's the wild thing. I think this is going to correct very fast. I think that we're obviously not going to push up any further. Um, we'll know for sure if it's going to go down and finish this C wave if we're able to start closing below 202. And again, guys, it's what, $17 away. It's not a lot of money to see evaporate from the markets in the next 2 weeks of this month that we still have left. So just keep an eye on that. It's bloody, and I think a lot of people are starting to realize that, and they're trying to get out of their positions. And I think some of the retail that is trying to buy some of these, they're just gonna absolutely kill their buying power going into this, the end of this bear market. So absolutely bloody from TradFi. I got nothing else to say on Tesla. Do you have anything else to add?
No, I'm just looking at Meta as well. They're down 12% in the last 3 weeks. Another one of those.
Oh, look at that,
frothy.
Dude! It's over. That's a bearish engulfing candle right there on the monthly. Look at that. That's fucked up. I mean, you have a little bit more to go. Likely, it's probably going to go down more. But I mean, if it goes under 284 and we close under 284, that's GG in the check, guys. That's game over for Meta. It's probably going to be on its way down, just like Tesla is. Obviously, I think everything's going down, but I mean, that's insane how much it got met with the projection recently, like this month. Look at that. That's wild. Look at that. Oh my goodness.
It's ugly.
Phil,
like we talked about, man. Like it went on this biblical run where if you were holding some of these, like, yeah, I get that you don't want to, I don't know. The whole time in the market is better than timing the market thing. Yeah, there's some relevance to that if you don't want to pay attention to the markets. But at the same time, if you were looking at these charts and you were seeing that, Meta had 6 green months in a row, it was overbought, it was overhyped. We had talked it like constantly that there was this, every company that reported and had the word AI in their earnings report was just going parabolic. It couldn't last forever.
No way.
And some of these will bounce back, like it will, but we're going to need to see this pain first. And, maybe there's a little bit of a recovery tomorrow. I kind of doubt it. I kind of think tomorrow is going to be another really ugly day. Like, it wouldn't surprise me in the least bit if we see another day where people, you know what, I can't sleep in these positions over the weekend. I just need to get out. And we're seeing also, I'm not an expert on bonds, and that's something for the show I want to learn more about. But the longer duration bonds are seeing big movements up. Like the 30-year is up 1.15% today. You don't see bond yields move that quickly when everything is all sunshine and rainbows. Like,
no,
the bond traders out there, they're onto something. They know that there is pain coming and there is money moving into these longer duration ones because people are finally wrapping their fucking heads around the fact that interest rates are going to be high for a long time. It just is how it's going to be. They're not coming down like this year at all. They're not coming down probably Q1 of next year, maybe Q3. Like, that wouldn't shock me in the least bit, especially if we see a pump back up in inflation.
Some people are wrapping their heads around it, but yeah, I mean, it's absolutely insane, some of these bond yields. And again, I think that there is going to be a squeeze in some of these bonds, right? I think that there's going to be a point where some people start selling them off, or to the point where it's like, okay, these yields have to go up in order for, the US to get some money coming in. Obviously, they run off debt, right? So they're going to need that money flowing into the market, or, the bond market at least. And I think that there is a bit of a squeeze that will come from some of these nations maybe de-risking selling off. I think more so you're going to see that from probably Japan, just as they try and get inflation under control, because we're seeing the yen absolutely fucking skyrocket. Bank of Japan, I don't know what you guys are waiting for, but a lot of your country is they're aging, they're getting older. So please don't fuck them before retirement. But it seems wild to see what's going on over there, and how, again, you're seeing Joe Biden, and Janet Yellen obviously are saying that the impacts of China are probably not going to impact the U.S. Maybe that's why some congressional leaders are also buying inverse ETFs of the market too, right? So I think people kind of know what's going on. And again, never listen to what anyone's saying. Always follow the money, because the money speaks louder than the words that they ever could. And it's also closer to the truth. So what I'm seeing right here with Meta, just to get back on track, this target right here is a gap that I think needs to be filled, which is between 221 and 234, roughly in that range. It doesn't mean that it's going to have to get here instantly, but it does mean that we're probably going to fill this gap. I'm kind of hesitant about what's going to happen tomorrow in the TradFi markets because I do expect a bounce at some point. Again, short-lived, 100% short-lived, but I think it's going to be, important if we look on the weekly here. Maybe, I don't know. This might be a bad example. Let's look at Netflix. Netflix might be a better example. We can see that Netflix is coming down. I anticipate if we're going down in 5 waves that we're going to have to get a wave 2 recovery at some point. I don't know if that's happened already with this bounce here, and then now this is just a wave 3, but you might see some type of bounce that holds us up into September. And I think honestly, September, October is when we're going to see the market absolutely go into that wave 3 where it's absolute capitulation. I think there's 2 capitulation events on the horizon, one in crypto and one for the greater, broader macroeconomic outlook for at least the globe. I think that one's just gonna, squeeze the last bit of liquidity out of these, markets, and people are gonna panic sell. But I think that we do need to see some type of bounce at some point, and that's how bearish I am. But I think that it's gonna be a short-lived bounce to the point that just kind of gets us over the 20-yard line into September, and then we're in the red zone then, and I think we're gonna absolutely dump. I think we're going to dump in the next few months, and I'm being very conservative with that. I would love to see it dump tomorrow, but clearly I know that markets aren't that irrational until they are. So from TradFi, that's all I got. I do want to jump into crypto because we've seen absolute blood red in crypto, and we got Bitcoin under $28,000. We kind of did talk about that possibility a while ago. We said that, if it didn't push up, there's a good chance that it could try and fill this large gap right here, this green candle that we got back in June of this year. It looks like we're filling that out, right? It looks like we came down to the bottom of this parallel channel. We wicked right off of it. We filled a pretty good amount of this gap. Now, the fact that we wicked all the way down here and we found some support on this blue trend line does mean that there is a potential opportunity for the markets to push up from here, right? Obviously, we've seen when it bounces and it comes down here and it bounces, then usually we do see a bit of a push to the upside. And this is just what I'm seeing with Bitcoin. Obviously, came down here and push up. But again, keep in mind, this was all CZ or stable coins. We all know that stable coin market cap went down and Bitcoin market cap went up almost in equal denominations when we saw this retest down here. If we're unable to hold this and we start moving closer below this 200 EMA on the daily, then maybe this channel is broken and then we can kind of cross that 34, 35, dreams of hitting this futures gap on the CME, wipe that out completely. We can also wipe out the idea of maybe potentially retesting that 31K. I think if we do break this and we do break into it and we do test 31K, there's a good chance that we're going to get rejected pretty similarly to how we've gotten rejected recently. I've seen so much money come onto the exchanges lately, and we're talking like $75 million or more, and people are just dumping Bitcoin. We're seeing that, let's go to ETH right now too, because ETH's been on an absolute
Bitcoin
tear to the downside.
Rejected at 31, worse than I did my freshman year of high school, man. It's ugly. It's ugly.
Oh, you got rejected? I never got rejected. No one ever looked at me.
Oh, dude. Back in freshman year of high school, I was rocking buzz cut, glasses, braces. I wore a lot of Stone Cold Steve Austin t-shirts back then. So, very stylish at the time as well. So I wasn't cool enough to rock the Jenkos. Yeah, I was out there Stone Cold stunning people.
Man.
The level of rejection, it was like my freshman year asking girls to homecomings. The only thing I've seen worse than Bitcoin's rejection at 31K.
You gotta ask out girls that look like China, man. That's the only way that they would say yes as a Stone Cold fan. But that's the one you would want, right? That's the one that can fight your battles for you.
Yeah, exactly.
Just don't tell her to suck it. But yeah, absolutely. This is the ETH chart. I want to pull this up because I'm going to pull up Matic next. But this is the macro, right? This is this massive parallel channel that we've been trading in for such a long period of time. Honestly, I can pull this up a little bit more. It's probably going to fit better. Yeah, that probably fits better there. But that doesn't make any difference to where we currently are, right? Where we are right now is that we've broken this parallel channel, this channel that we've been in since FTX. We bottomed out here around 1,083. And then we just been trading sideways for the longest period of time. And honestly, just looking at this right now, I could even see a head and shoulders, left shoulder, head, right shoulder. And now we're starting to break this down. And right here, we've gotten below the 50 and the 200 EMA. We're out of this parallel channel. I don't know if we're going to retest this. Maybe we retest the parallel channel and we get rejected. But I mean, what happens when you break these channels that are so big on the macro, like even the weekly, we can see how much we've shot up. And again, I expect downside from here, right? I expect us to go probably sub 1,000, closer to that $600 to $700 ETH level. And we've seen how much it's absolutely tanked today. But I want to pull up Matic because it's a very similar pattern that we saw with Matic, right? We saw Matic trading in this massive parallel channel for the longest period of time. And then when it finally did break, let's pull up the ruler. We broke from right here to where we currently are, which is about a 40% drop. These channels do, when they do break, obviously it does take time, but they break significantly. And we've been putting in such a huge one for ETH that, 40% from where ETH currently is. I don't think that, Matic by any stretch of the imagination is done moving to the downside. But like, just let's say from here, 40%, that puts us roughly around this level of, 1,083. Very interesting how things line up like that, right? So that would push us all the way down to where the channel itself began. And I do think that there's going to be further downside from there. Again, I don't think that Bitcoin dominance remaining sticky or remaining extremely high while alts bleed is going to be, good for alts in general. Again, Bitcoin's only dropped a few $1,000s in the past few days. It was at 29. It's at 27,969 right now. Pretty much imagine when Bitcoin's at 20K. Right? Imagine what's going to happen to the alt market and the ride to 20K. Imagine everything that's going to happen in between. Bitcoin could be being a bitch at 24,000. And then guess what? It's just everything's going to naturally bleed because people are leaving the alt market and Bitcoin is remaining steady because a lot of people are holding. But that just means that the pairs between alts and Bitcoin are going to remain bloody as can be. We can see that in ETH BTC charts. We can see it on alts versus BTC charts. It just is what it is. So Ethereum to me looks terrible. I think that what we're expecting from Ethereum might be a test of, I'm not going to do the weekly, maybe the daily. Obviously, if we're not able to sustain, if we're not able to get back up here and retest this, that's 6. I think actually it was the weekly. My bad, guys. It's this yellow line right here. I think the 1618 might be a level of support that we might have to test. But again, whether that holds or not, well, that remains to be seen. It just doesn't seem likely that anything moving forward is going to hold for a long period of time. So if it does, again, I believe it's going to be short-lived. I did want to pull up Bitcoin once again. I kind of forgot something here. Bitcoin had a level that, I was keeping an eye on for a while, and it was 27,291, right? 27,291 puts us right around here. Yeah, so obviously if we test this 50 moving average here on the weekly and it doesn't hold, then we're going to have to test the 200 EMA. Again, I kind of broke this scenario down. If it broke this channel, then it would probably come down. But keeping an eye on this range right here is the most important thing, I think, for Bitcoin and alts, just because if it does break to the downside, obviously alts are going to bleed more. If it does push to the upside, then maybe there's a bit of a squeeze for people who are shorting Bitcoin at the time. But regardless, in turn, that would hurt alts because the dominance is going up a lot higher. A few more charts just to go through real quick. We can see that this is the total market cap of all of crypto. Head and shoulders pattern absolutely seems like it's being filled, as expected. We broke the parallel channel. I mean, I could just pull this up like this, and we could see that through the course of time, we have broken this channel. Probably likely that we're going to start closing some weeks in the red below this. But we're on the 50 moving average right now. On the daily, we're below that as well. And I think that this has been a pretty successful call here. I think that's the left shoulder. Here's the head, and there's the right shoulder. And, once we get that, we anticipate this break to the downside here. So we're going to have to keep an eye on that. I think that lines up with expecting Bitcoin to come down and the alt market in turn absolutely coming down, and Ethereum coming down as well, as we can see from that chart. Total 3, keep an eye on this as well. Again, this is what we were anticipating, that we were going to start seeing a lot of money pour out of the alt market. And we can see from this break of this channel, this was back around, $350 billion. It was August 1st. I think we were talking about breaking that 300 billion somewhere around here. We broke out of this channel, so I thought it was invalid, but then we broke right back into it. And that was around $358 billion when it broke back into the channel, and we kept trading. We're currently at 330 billion. Don't mind the extra 3 billion that TradingView has added. But for the most part, it's like, all right, so it's broken a channel. It's on its way to the downside. It broke another channel that it was, putting in for a corrective pattern. And it seems like we're just going to continue putting these patterns until we get to the bottom of that market. And again, 300 billion is just a target because I think that's the origin of this move. I think it'll meet there for sure. But the thing is it possible to get to the bottom of this channel down here? This macro one, this macro bull flag that we're putting in, again, has to play out first before we could start moving in the right direction to the upside. But yeah, I think that there is a good chance that we're going to have to find support somewhere down here, whether it's here around 240 billion or if it's, long and played out into next year where we're closer to that 188, 182 billion dollars. I think that's the way that we're going to see a lot of alts play out here. I mean, I don't want to get into too many alts, but we can see that, Maddox dropped significantly in the past few days. XRP is under 50, it's under 60 cents. It's at 57 cents currently. BNB, if you've been shorting that, like I have, let's pull out that chart real quick because this ended up being right. It's a bear pennant, and we saw that it broke out, and this is probably going to be putting in some new trend unless news comes out and that further goes down. But again, came close to the origin, not perfectly. This could continue to stay red for a few days. Could be on the shorter time frames if we look at like the hourly. We can see that there is some type of, corrective pattern trying to be formed here. But again, same type of pattern that was put in here was put up here and then it broke down. Same one here, broke down. This is the dangerous part because once we start seeing a lot of this do sell off, we're creating these buy-in patterns, and then it's just going to be like this for a long time. It might get boring seeing so much red. That's all I'm saying. In the coming months, it might get really boring to see so much red in the market. But if you're positioned well and you have, obviously you can go long on other things. Like I'm bullish on commodities right now. I think that there is going to be opportunities for you to definitely get excited about seeing some green in some areas and then seeing red in other areas where you just absolutely said, okay, this is what I need in order to get in at a good entry level. So that's what I see with altcoins. Absolutely bloody. It's I really don't anticipate anything too crazy for the weekly close. I don't anticipate any massive liquidation events. Always be on your toes though. Use safe leverage. Don't overextend yourself, but also make sure that you're getting in at the right points, because if you get in at the bottom of a short, that's going to stress you the fuck out, and you don't need that stress in your life. There's going to be a lot of stress coming ahead, and just protect your position, protect your wealth right now. That's all I got to say on that.
You know what, Kevin? There's not going to be a lot of stress ahead because people watching this show are with us, and we're going to keep everything even keel, baby. Okay. This is not our first rodeo. Like some of the moon boys out there, we've been around these markets. We understand that there are ebbs and flows. And part of what we want to do is help you stay rational during irrational times, because that is one of the best things that you can do for your future financial health. Okay. So we're not going to get too high. We're not going to get too low. We're going to keep it on even keel. We're going to try to give you as much unbiased information as possible so that we can make the best decisions for ourselves and you can make the best decisions for yourselves. So that is how we're going to wrap up today's show. It was a great one. I appreciate it. Stay calm out there. If you want to just, at some point, you're going to set those DCAs up maybe and just leave it be for a while. Listen, we're 3 weeks away from football season. That's my time of year. Like, I'll still be paying attention to the markets, obviously doing this show every day, but it's going to be a welcome distraction. And it's going to be something else that I can gamble on that isn't the markets. So let's fucking go. Have a great day, everyone. Appreciate you so much. If you have not yet, down below, hit the like, comment, subscribe, share us out. I see everyone who retweets our stuff. I see Chris Hoddle every day putting out stuff for us. I see Randy retweeting it. I see Ace. I see Mr. House, Payne, all of you guys. Fucking great. Love you all. Have an awesome day, and we'll see you tomorrow.
Take care, everyone. Fuck the moon.